I have not been bullish enough on Solana for the first half of this crypto cycle, but this year the performance of Solana has hugely surprised me. With its explosive user adoption, Solana truly is taking the crown in bringing blockchain to the mainstream. Plus, there are so many strong catalysts coming up, such as the Solana ETF and the Firedancer upgrade. So in today's video, I will explain everything you need to know about the current state of Solana. We will talk about Solana's speed, reliability, retail adoption through Solana Pay, mobile and Blinks, and all of the Solana metrics compared to its competitors. Make sure to watch till the end, as I will give you guys my updated price prediction for Solana by the end of this cycle, which is now miles away from my target in 2023. Welcome back to the Virtualbacon channel. My name is Dennis. I'm a crypto angel investor for the past 6 years, and I have invested in over 100 crypto startups. On this channel, I share views on market trends and investing strategy to build wealth in crypto. Let's start off with the most important updates to Solana since 2023. Remember, in our last video, we have covered Solana's uptime. Is it still crashing regularly? Well, the answer was yes in 2022 and maybe in 2023. You can find all of this on Solana's own uptime tracker. Throughout 2022, Solana had 4 major outages. Then in 2023, there was only 1 day of outage in February, while the rest of the year was all good. And then again in February of 2024, this year, there was another outage, and so far there hasn't been any since. These performance metrics are very similar to most other blockchains like Avalanche, Ton, Polygon, or even most of the Ethereum layer 2s. So for all the Solana haters out there, no, Solana is not crashing regularly. It is just as reliable as all other blockchains out there today. The next most important criteria is decentralization. Is Solana actually centralized today? And why do people think it is? You see, a lot of this centralization talk about Solana is because of its token holder base. FTX, Alameda, and Jump Crypto used to hold a large concentration of all the SOL tokens. But now these have completely been resolved, and the FTX bankruptcy estate has completely been sold off. So since the token is no longer centralized in a few holders, what about the network and its node concentration? Well, today Solana has over 1,500 validators spanning across all continents in the world. But just because you have a lot of validators doesn't mean all of them can make decisions. Who are the actual power users in this validator list that can collude together to control the network? Well, that answer is about 20 validators. You see here on Solana Beach, it says cumulative stake above forms a super minority, which is usually around 33% for most proof-of-stake blockchains. And this means if the top 20 validators all put their stake together, they could potentially halt the network and censor the network through collusion. Now, this 20 number is not a problem for Solana. Most other proof-of-stake blockchains out there have this problem of collusion among its top stakers. There's a metric specifically aimed to categorize this called Nakamoto coefficient. Simply put, the Nakamoto coefficient is the number of validators in a proof-of-stake network that can collude together in order to control more than 1/3 of all stake on the network, or 33.3%. And you see on all of the top blockchains out there, for Solana, for example, we have 19 Nakamoto coefficient, meaning the top 19 validators can collude. So if you go by this metric, well, a lot of the other blockchains out there are actually much more centralized than Solana. Now, interestingly though, Ethereum here, it says it's 1 Nakamoto coefficient. This isn't actually accurate. According to the official research done by Solana Labs, the Nakamoto coefficient of Ethereum is actually around 20. This is because it takes about 50% of the entire network's stake in order to control the Ethereum network versus the 33% required to control Solana. So when you compare the Nakamoto coefficient of Ethereum versus Solana, they are actually very similar. It takes around 20 entities together to control the network. Now, there are 2 major caveats here. Number 1 is that Solana is actually a smaller market cap coin versus Ethereum. This means the 20 validators, all of their stakes to collude together, actually takes a less amount of capital, less amount of money in order to attack the network. Versus on Ethereum, even though there are the same 20 validators that you need to control, it takes a much larger amount of money in order to make them all collude. With this point considered, it's economically much more difficult to attack Ethereum versus to attack Solana. The second caveat when talking about decentralization is around staking pools. You see, on Solana, the top 20 validators here are actually all separate. They're not single large staking pools that take up a huge percentage. However, this is a problem on Ethereum with pooled staking and liquid staking. As you can see on the pie chart breakdown, Lido currently controls 29% of all Ethereum staking among its validators, with some of the other large pools controlling 16% and 12%. So if we consider staking pools as single entities that can work all together, the actual amount of entities that can collude together to control Ethereum becomes very risky. Take a look at this. The number of entities that can take up more than 50% of the network's stake of Ethereum is actually 3. So if you control Lido, Coinbase, and this unidentified staking pool, you effectively control nearly 60% of all Ethereum staking. This is a big problem that has just been started since Ethereum fully transformed to proof of stake. And this is a big reason why so many teams are working on decentralizing these staking pools and bringing up more liquid staking providers to solve this problem. I think most of these players, including Lido, don't have the intention to destroy Ethereum. So I see this problem will be eventually solved, but at the current stage, it's actually very risky for Ethereum, and we have to give this point to Solana. With its current top 20 validators, this is actually a much more healthy staking pool divide versus Ethereum. Okay, moving on from decentralization, let's talk about some of the performance upgrades of Solana. How fast is Solana today? According to research done by CoinGecko with real benchmarks from mainnet transactions, Solana is able to process around 1,000 transactions per second. This is actually ranking number 1 in the entire blockchain industry. The trailing second and third place are Sui at 850 TPS and BSC at 380. Now, there is one major upgrade that has just been released to Solana called ZK compression. TLDR, ZK compression is very similar to proto danksharding that has just gone live on Ethereum. It essentially is a protocol upgrade to bring the storage of Solana transactions to a much cheaper part of the chain's storage. So ZK compression aims to store state on cheaper ledger space instead of the more expensive account space. This allows applications to scale to millions of users. This storage part is the compression. Now the ZK of this upgrade is used to ensure the integrity of this compressed state, this smaller piece of storage. So what does this look like today? These are the state cost reductions compared to regular Solana. So there are two types of accounts on Solana that's most important today. There are PDA accounts, which are accounts that need to be created in order to interact with a Solana application. And then there are token accounts, which all need to be created in every time you buy or sell or hold a new token. So you see, with the current gas fees on Solana, with a regular Solana account, every time you interact with a new Solana application, it takes 0.0016 SOL. And every time you send, receive, or buy a new token, that takes 0.2 SOL to create that account. Using ZK compression, these numbers are effectively 160 times to 5,000 times cheaper. This might not be useful for everyday users to interact with 10 to 50 different tokens. But for a developer, this is a huge difference. Imagine this scenario. If we are minting 10K token accounts to 10K people for airdrops, using regular Solana token accounts, that takes $2,600 with Solana trading at $130. With ZK compression, that only takes 50 cents. This is a huge difference and removes much of the barrier for developers. Essentially, you don't need any startup capital to airdrop 10,000 tokens to 10,000 holders. And what's super cool about this is that the ZK part of this doesn't live on a separate layer or a layer 2. Instead, the co-founder of Solana, Anatoly, also have replied to questions before saying that there will be no fragmented liquidity or bridging involved in order to use ZK compression. This is actually a big upgrade that I'm very excited about, which will open up a lot more usability, especially developer activity for Solana. Now, going back to the performance of Solana versus other chains, not only is the transaction per second numbers very impressive, but also the adoption numbers is absolutely exploding. Let's take a look at a few examples here of Solana versus, for example, Ethereum. So the number of active addresses on the Ethereum network per month is averaging around 10 to 15 million active addresses per month. When looking at Solana, even though they were trailing behind Ethereum in 2023 at around 7 to 8 million active addresses per month, this number has completely exploded since the beginning of this year, going to 20 million, then now reaching almost over 40 million active addresses. So there are twice as many different addresses that are active, trading and using Solana blockchain every day, twice as much versus Ethereum. Here's another more in-depth chart comparing daily active addresses and the trends between them. And this chart tells a similar story. So you see in the summer of 2023, Solana was showing a little bit less daily active users than Ethereum, but since the beginning of 2024, this number has continued to go up. So the daily active user count is continuing to increase. Now, there are a few other interesting metrics to note. Number one, the daily number of transactions on Solana is actually almost 15 times more than that of Ethereum. However, at the same time, the total value locked, or the amount of money that is currently deployed on the chain as DeFi, is actually less on Solana than on Ethereum. Think about why that is. And lastly, the decentralized exchange trading volume tells a huge story. So you see in 2023, Ethereum used to trade around $1 billion of daily trading volume on DEXs, while Solana has about 50 million on average. But by the beginning of 2024, this number has pretty much flattened out for both Solana and Ethereum, which both trade around $1 to $1.5 billion on average per day. So why are these numbers so different? Why is Solana leading in some while Ethereum is leading in others? This is because the use case of Solana and Ethereum is clearly being separated. So Ethereum today is really the DeFi heavy chain for whales, for large institutional buyers, and for people that are parking a huge amount of money on Ethereum for a longer period of time for passive income. This is why the total value locked on Ethereum is still much greater than that of Solana, about 15 times greater. However, looking at the daily active addresses and the daily number of transactions, this tells me that Solana is actually capturing a huge amount of retail audience, much more than that of Ethereum. You might have been seeing this among retail friends that just got into crypto this year. Most of them are onboarding into crypto through actually Phantom Wallet on their smartphones. Very few of them are actually using MetaMask Mobile or Trust Wallet, or even Binance for all that matters. This will also explain why the decentralized exchange trading volumes are actually much similar for the two chains. On Ethereum, there are a much smaller number of active addresses holding, on average, a larger amount of money for a longer period of time, but their individual trading volume per trade is greater. However, on Solana, there are a much bigger number of people using the chain with their average transaction numbers or amount actually being smaller. But on average, these two numbers match out to be about the same for total volume across the two chains. So TLDR, Ethereum is kind of the whale's DeFi chain, while Solana is the go-to retail chain for things like meme coin trading. I know some people will give Solana flack just because they focus on these small individual retail traders that are trading $100 in meme coins. But isn't this the retail adoption we always look forward to? So keep that in mind before you start to hate on the chain. Now, how is Solana actually able to achieve such a drastic increase in retail adoption? There are two major points that I have already seen early signs of last year. Namely, these are the Solana Mobile Initiative and Solana Pay. Solana Mobile has been live for about 2 years now. It's a full app store supporting all the Solana decentralized applications in a mobile-first environment. Mobile-first is what truly matters here. It's the reason why so many new crypto users, when introduced to crypto by their friends, they first download the Phantom Wallet instead of MetaMask or even Coinbase. Quoting Anatoly, again, the co-founder of Solana, Solana Mobile is more important than ever. If you want the dual poly to be open to this kind of UX for any blockchain, a third mobile app store ecosystem needs to be eating their lunch. So the user experience on mobile is what they focus on first. And then we have Solana Pay, which is a micropayment solution using not only the Solana token, but also USDC, USDT, and other stablecoins on the Solana blockchain. This has already been integrated with Shopify for over a year, and much more recently, they have announced a lot of upgrades to this, introducing Solana Actions and Blockchain Links, or Blinks. So Solana Blinks is the next iteration of Solana Pay, which is aimed to connect Solana-based payments to Web2 social media websites and all Web2 environments such as chats or any discords or forums out there. So recently there has been a lot of hype around this with headlines quoting Solana introduces Blinks, which can bring blockchain entirely to the Web2 space with no friction. Now, I think there is a large caveat to be said about this. So what is Solana Blinks? Very simply, they are these embeds that you can send to anyone on supported websites such as on x.com or Twitter. So for example here, this is a link that I sent directly from Radium to my Twitter, and anyone that's viewing my tweets on this exact same tweet can see this interface. I didn't code this decentralized application. In the link, I said that, okay, anyone that sees this link and has a Solana wallet enabled can directly make this transaction on Twitter instead of going to the website, the decentralized exchange Radium. So here you see, if I click buy one Sol, my Phantom wallet will directly open up, prompting me to enter password and execute this transaction. So with Blinks, people can not only trade tokens, but also, for example, post an NFT from a marketplace for them to directly buy it on Twitter, or request some payment, or request any governance vote or some charity donation, etc. And there are quite a few more cases that you can use this with, not only with a link embed, but you can also do this with a QR code, with push notification, with a messaging app, etc. Now, a big problem I have with these headlines is that Solana Blinks doesn't actually solve the problem of onboarding people to Solana. You see, in order for anyone to view this Blinks on my Twitter account right now, you need to have a Phantom wallet or a Backpack wallet already installed. If you don't have a Solana wallet yet, you will not see this. Instead, you will see a regular link that links you to Radium, and Radium still has to teach you how to install a Solana wallet and buy some Sol. So Blinks is not so much bringing blockchain to the Web2 space, but more of a product to improve the transaction experience of existing Solana users. What I really want to see in the future for Blinks is to integrate with fiat on-off ramps and smart wallet providers directly, similar to Coinbase, what they're doing with their smart wallets. So if the next iteration of Blinks can show this interface for everyone, no matter if they have a Solana wallet or not, and show them a different interface. For example, if I have a Solana wallet like Phantom already installed, it will tell me to directly swap. But if I don't have a wallet installed, it will teach me with one click, or even better yet, if it removes the seed phrase and all that complexity altogether and just lets me log in with email password through a smart wallet by integrating with a third-party exchange, that would be much smoother. With that kind of a workflow, that is truly a embed that I can send to anyone, no matter their experience with Solana or blockchain at all. They don't need a wallet, they don't need anything. And if I just want them to buy my NFT or my meme coin, I send them a link, and I don't have to worry about anything, any onboarding. They will be able to do it with just their email and their credit card. Honestly, this is the end game of Solana in my eyes, completely removing the onboarding flow from traditional Web2 to Web3. So Blinks is probably the first direction that they want to take, but I expect much more to come for this kind of interface. Okay, shifting gears now, let's talk about the upcoming catalysts for Solana in this year and next year. So number one is the Firedancer upgrade coming to Solana, and a lot of people have been expecting this to drop this year. What is Firedancer exactly? A lot of people are calling Firedancer Solana 2.0, that is much more scalable, a huge upgrade, but this is actually a big myth. You see, Firedancer is actually a validator client, or a new piece of software that current Solana validators can choose to use. This is not a change in the core Solana protocol. There is no hard fork or even soft fork required to adopt Firedancer. Putting aside the performance upgrades, the main reason why Firedancer was started is actually because Solana has a validator health problem. You see, even though Solana is decently decentralized with the number of validators that control the stake, there is actually a decentralization problem in Solana's software clients. You see, currently there are only two software clients that Solana validators can run. There is one version written by Solana Labs and another version written by Jito. And all Solana validators run these two pieces of software. They choose to run one or the other. Today, 68% of them run the Solana Labs version and 31% of them run the Jito version. Why is this a problem? Well, you see, Solana Labs validator client and the Jito validator client are both written in Rust programming language. This means a lot of the dependencies will be the same among the two software. So imagine if there was suddenly a software bug in the Rust coding language or some libraries that the two software share. Well, all of a sudden, all the clients go offline and you don't have any backup software that is independent from the current technology stack. This is a problem that only Ethereum is able to address very effectively today. So client diversity is heavily talked about in the Ethereum community. It's really important in order to bring smoother network performance and protect it against bugs, resilience to software attacks, and shared responsibility, etc. And you see on Ethereum, there is a very healthy client diversity. So there is the Geth client, there's Nethermind, there's Besu, Aragon, RETH, Corgeth, etc. So the top 4 Ethereum clients make up about 98% of all validators, but all 4 of these clients are written independently in different coding languages and different technology stacks. So even if one of the technology stacks is completely attacked or a huge vulnerability is discovered, people can just switch over to other node clients and Ethereum can just keep running. So the chances of the same bug being implemented in all 4 of these different clients with different programming languages across different development teams is nearly zero. This is why the Ethereum software is super resilient to bugs. So in the case of Solana, currently it is heavily dependent on Rust and heavily dependent on these 2 development teams, Solana Labs and Jito. And if a critical bug is discovered in Rust, well, Solana will have a huge problem all of a sudden. This is why Firedancer and other clients are even being developed in the first place. So Firedancer aims to bring enhanced reliability and bring more failure points and more options in terms of software. The Firedancer software is written from the ground up using C and C++ programming languages with completely different libraries and technologies versus Rust and the current Solana clients. Now, while the teams are building this new client for Solana, why not make it super cool and super efficient in processing? And that's the Solana 2.0 part that people are super excited about, but it's actually a tertiary part of this upgrade. So the new Solana node client, which is the Firedancer software, is able to bring much more concurrent transaction processing, so faster lanes of processing new transactions, and sharding support, which was previously not available on Solana. And apparently they will have better P2P communication, a more reliable network connectivity, which will hopefully solve the even 1 time per year downtime of Solana. Okay, so theoretically, what is the maximum transaction per second that Firedancer can help Solana achieve? Well, apparently with Firedancer on testnet, they were able to benchmark 1 million transactions per second. Keep in mind, this is a testnet environment that's ideal using just one machine. The current Solana network on testnet is also able to benchmark 65,000 transactions per second already, even though the mainnet transaction in real numbers after real transactions is actually around 1 to 2,000. So this is why don't get your hopes up that Solana will all of a sudden bring 1 million transactions per second. We will probably still expect less than 10,000 transactions per second once Firedancer goes to mainnet. But only 10,000 transactions per second, that's already much faster than everything else in the industry. So to summarize, while everyone gets super excited about the performance upgrades of Firedancer, I also think it's super important to highlight the reliability improvements by introducing a new client to Solana and the client diversity, which will introduce a much more decentralized version of Solana that has multiple versions of different software that can all run the same network. This is actually much more important for the long-term potential of Solana versus some short-term, TPS numbers that shows 1 million per second. So Firedancer is expected to go to testnet this summer and maybe mainnet by the end of the year. Watch out for their announcement during the Solana Breakpoint event in September this year. The other major upcoming catalyst catalyst for Solana is with the Solana ETFs. So first of all, the Canadian version of Solana's ETF called the ETP from 3iQ has already been announced, and most people expect this to be approved at least in Canada this year. However, it's very important to point out that the Canadian version of a crypto ETF is actually very different from the American versions for a few reasons. Number one, the Canadian regulations are much more lenient. The Bitcoin ETFs in Canada, for example, started trading way back in 2021, a whole 3 years ahead of Bitcoin ETFs in the US. The Canadian financial markets is also a tiny market compared to the size of the US Wall Street. And last but not least, even the 3iQ version of this Solana ETF is actually not a full ETF. It's actually a ETP called the Solana Fund. So similar to the Bitcoin Fund and the Ether Fund introduced by 3iQ, these are actually closed-end funds that have only money going in but do not have redemption processes. These are very different from ETFs, which can keep track of the daily price movements of the real assets by keeping redemptions always open. So the closed-end version of this Solana Fund is very similar to the Grayscale Bitcoin Trust versus the Bitcoin ETFs that we have just seen this year. Nonetheless, the filing in Canada is a good sign, especially considering this is the first case in North America. Now, what's much more impressive is the actual Solana ETF filings in the US markets from a few of the large players already, including VanEck, 21 Shares, Grayscale, and Wisdom Tree. However, I do think there are a few big reasons for us to be cautious about this versus the Bitcoin and Ethereum ETFs that are for sure coming. Number one, BlackRock is not in this mix. Remember, all of these ETF filings are not new in the last 2 years. Even the Bitcoin ETF has been filed as early as 2013 by the Winklevoss twins. And VanEck, 21 Shares, and all these firms have been denied multiple times before BlackRock finally stepped in, and this pushed the regulators over the edge and the Bitcoin ETFs got approved. Number two is that there are currently no existing Solana futures trading on any of the traditional markets in the US, such as CME or CBOE. This is very different to Bitcoin and Ethereum because the CME group has already been trading Bitcoin and Ethereum futures for multiple years. So because they already have passed these futures products, it was much easier to argue that the spot ETFs were very similar to these products and should be approved. Number three reason is that Solana is not viewed as a commodity in the SEC and the CFTC's regulators' eyes versus Bitcoin and Ethereum. Even Ethereum has gone through multiple years of this classification of a lot of times being called a commodity from the CFTC and many other judges out there. For the case of Solana, however, they are still under heavy question. Remember just last year, the SEC sued Binance and Coinbase for offering unregistered security trading. And one of these securities that were unregistered is the Solana token. And just this March, Coinbase actually had to step back against the SEC in this lawsuit. Their motion to dismiss the SEC lawsuit was actually ruled against them. So the SEC is going ahead, pursuing them and classifying potentially many coins as security. This is still ongoing. And last but not least, the chances of a Solana ETF getting approved is heavily reliant on administration change in the White House and the SEC. Again, usually new crypto ETFs go through years of denials and refilings, and the SEC has to take many battles, even taking them to court in order to classify even one new asset as either a security or a commodity. Just look at what they did with Bitcoin and then Ethereum, and then a little bit with XRP. Bloomberg analyst James Seyfarth is actually one of the top experts in predicting the timeline and the percentage chance of approval for all these cryptocurrency ETFs. And he actually thinks that the Solana ETF filings from VanEck is more like an options bet on the election's outcome. Specifically, it's like a call option on Trump winning the election. After releasing this piece, VanEck's head of digital assets, Matthew Siegel, actually confirmed this and saying the Solana ETF filing may be the best bet that Trump can win. So what does this mean? Essentially, if Trump doesn't win, all bets are likely off and these Solana ETFs probably won't get approved. It will have to go through many trials and tribulations and a few cycles of denials before they can come. But if Trump does win and Gary Gensler is replaced from the SEC, then chances are this might get approved this cycle and potentially next year. This actually matches up to VanEck's filings perfectly. So you see here, Usually the ETF filings from these cryptocurrencies takes the maximum 240-day deadline before the SEC responds. So if VanEck were to file their 19B-4 for the Solana ETF today, which will kickstart the deadline countdown, the deadline would then become February 25th, 2025, which will be just 1 month after the election results and potentially Trump coming into administration. Then going back to the probability estimates, on Polymarket right now, about 64% of bets are placed on Donald Trump winning the 2024 presidential election. No matter if you like or hate Trump, this is actually a very important metric for us to keep in mind and to keep an eye on in order to gauge, believe it or not, how likely the Solana ETF will get approved next year. So assuming that if Joe Biden wins the election this year, then the Solana ETF will likely not get approved. Then if Trump gets voted in, I would like to think that there is about a 60% chance on top of that for the Solana ETF to get approved. Remember, there was around 75% chance for the Ethereum ETF to get approved and about a 90% chance for the Bitcoin ETF. So I think 60 is about a high range already. So taking 60% times that by 64%, that gives us around a 40% chance overall that the Solana ETF gets approved. That is my current estimate percentage. Now, obviously, again, we need to keep an eye closely on the presidential election results. If Donald Trump gets voted in, then the chance for the Solana ETF to get approved all of a sudden jumps to 60%. But if Donald Trump loses, then the chances drop to near zero. Is my logic clear there? Hopefully this makes sense to you. And just the last little bit, when can the Solana ETF actually get approved? Well, the earliest deadline right now is February 2025, specifically the end of February. So by the time you're watching this video, the deadline should already be extended towards March of next year, assuming that VanEck hasn't filed their 19B-4 forms yet. So TLDR, don't get your hopes up. There's only about a 40% chance I'd give Solana ETF to get approved before March of 2025. We need to keep a close watch on the presidential election results and whether if the SEC changes leadership and replaces Gary Gensler. Okay, finally, let's get to my Solana price prediction by the end of this bull run. In my last video in October of last year, I gave a price target of Solana at around $250 or around the previous all-time high by the end of 2025. Now, my current targets is actually much higher given how far Solana has come. But I'll be using very similar projection metrics, which will include Solana supply, which we'll get into, the market cap target, which we can calculate using the total market cap of all cryptocurrencies times that by the Solana market dominance. So there are a few numbers we need to get down first. Number one, we need to know what the total supply of Solana will be by the end of 2025. So the current supply of Solana is 579 million. And Solana has about a 5.2% annual inflation rate right now. So from now until the end of 2025, that is around 1.5 years. So take 5.2 times that by 1.5, that gives us right around 8% of inflation. So we can take 579 million times that by 1.08, that gives us 625 million tokens by the end of 2025. This is the total supply after inflation. Okay, then we need to figure out our market cap target for Solana. Let's start this with my base case for the entire crypto market by the end of this bull run. So my projection for the price of Bitcoin is right around $250,000 on average by, let's say, end of 2025. And according to Bitcoin's mining schedule, the supply of Bitcoin will go to around 19,950,000 coins. So timing those two numbers gives us right around 5 trillion market cap for Bitcoin by the end of this cycle. For the sake of this video, let's assume Bitcoin will remain at its current dominance levels. This is one big caveat that very few people can actually get right. Will Bitcoin lose a lot of market share or take up a lot more market share? I don't think anyone is able to answer this. So let's just take the average in the past 1 year or so, around 50%, which means with a $5 trillion market cap for Bitcoin, the total market cap of all cryptocurrency should be 10 trillion. Very simple, 5 trillion divided by 50% equals 10 trillion. Okay, then let's look at the Solana market cap dominance. You see, Solana has been rising in dominance against the entire crypto space this year. And we know the reason why after looking at all the metrics. Solana's daily active users, the transaction volume, all the metrics have been going up. And this is why it has risen from 0.75% all the way up to 3% dominance on the market. For the sake of this video, again, for my base case, let's just assume that Solana will remain at the current dominance level. It wouldn't even grow anymore and take up a larger market share. I think this is super conservative already. So 3% market dominance of Solana times that by the total market cap of all of the crypto market, which is 10 trillion, that gives us $300 billion in market cap. So essentially, this is my average case estimate for Solana's market cap to reach by the end of this bull run. 300 billion market cap. Now, taking 300 billion and we divide that by our previous total supply projection by the end of 2025, that gives us the price of Solana as a target of $479. There you go. This is my basically average expected return for Solana by the end of 2025. I expect it to reach right around $480. Now, previously, you guys know I used this exact same projection metrics to come to around a $240 to $250 projection because I expected Solana's market dominance to remain a lot lower, somewhere around 1.5%, with a total market cap of $10 trillion for the entire space. But I have already been proven wrong, so these numbers are actually adjusted way up. Now, can Solana reach a much higher number? The answer is absolutely yes. I think it's quite unquestionable for the total cryptocurrency market cap to reach 10 trillion within the next 3 years. Now, the main question here is how big of the total market cap can Solana actually take up? Well, looking at this Solana dominance of total market cap chart, you see this is actually showing a clear breakout above this 2.75% level. So assuming this level can hold, we wouldn't be surprised to see Solana trend much higher, maybe even towards that 5% level as a whole level by the end of this bull run. So even if Solana just reaches 5% market dominance, that is a huge improvement. So let's look at some potential moon math for Solana if this happens. So again, taking $10 trillion times that by 0.05 or 5%, and then divided that by the total supply of Solana by end of 2025, that gives us $799 per Solana, $800 per Solana coin by the end of this cycle on the high-end estimates, assuming Solana takes up 5% of the total market share. Does that sound like a lot? Well, the number sounds like a lot, but when you consider how fast Solana has grown, 5% of the total cryptocurrency market cap really doesn't seem like much. Just look at how much is happening on Solana today with all the meme coins, all the integrations, and the growth of Solana across all of the entire space versus all of the chain competitors. Solana is even catching up versus Ethereum now with total decentralized exchange trading volume. That is a number I never thought I would see happen, but it is happening as we speak. So I have to adjust my targets when the numbers say otherwise. So this is why I'm actually turning much more bullish on Solana with this new estimate this year. So TLDR, my bare minimum estimate for Solana still remains at around that $240 mark, the previous all-time high. This is the absolute minimum I expect Solana to reach. My expected return for Solana by the end of 2025 is around $480. This is 3% dominance just like right now, assuming Solana doesn't even grow and total cryptocurrency market just grows. And my high-end expectation for Solana is at $800, assuming Solana grows from 3% market dominance to 5% market dominance, which is not that big of an ask. Okay, there you have it. These are all of the most important things you need to know across the entire Solana ecosystem. We talked about Solana's actual performance, its downtime, its decentralization efforts, and corrected a lot of the myths around Solana being centralized. It really is not centralized anymore, and it really has top of the line performance versus all other proof of stake blockchains out there. Solana's transaction count, its daily active users is actually even catching up to that of Ethereum. Very impressive. And much of the Solana technology upgrades that's been shipped this year, including zk compression, Solana Pay, Solana Mobile, and Blinks are actually very impressive. Firedancer is not exactly a Solana 2.0 performance upgrade, but more of a decentralization and smooth client reliability upgrade, which is just as important. The Solana ETFs, don't get your hopes up too much. Look at what happens in the presidential elections this year and the SEC in order to judge it more clearly, and at least expect it to happen by mid next year. And last but not least, Solana updated price prediction from yours truly. I hope these numbers make sense to you with the same methodology that I have used in our last Solana video. Let me know down in the comments if my predictions for Solana are bullish or bearish. If you found this research on Solana helpful, make sure to share it with a friend. I'm getting much more convinced on Solana's future after doing this research, and this is why I have allocated a significant portion of my portfolio in Solana. So if you're interested to learn my entire updated crypto portfolio, make sure to subscribe to the channel and turn on notifications, because the next video I will be dropping is my updated complete portfolio. Lastly, you should definitely follow me on Twitter at Virtualbacon0x. This is where I drop my day-to-day alpha as I'm doing research for these videos. I also talk about a lot more degen stuff, such as meme coin calls, airdrops, new token launches, etc. So a lot of stuff that you cannot really find on my YouTube. And while you're at it, make sure to join our Discord with the link in my bio, or go to discord.gg/virtualbacon. We have our free VIP program where I post daily alerts on, again, a lot more calls that are just curated for our insider community. Thank you guys for watching, and I will see you on the next video.